Just what does Bitcoin's flash crash tell us about how easy it is to manipulate the crypto markets? And Bitcoin is going prime time, guys. It's on 60 Minutes. It's here. It's happening. The price of Bitcoin at the time of recording this video is over $8,000, which is, of course, totally awesome. But just the other day, we had a big flash crash, pushing the price down around 20% or to around $6,200. Now, this flash crash was caused by one 5,000 Bitcoin sell order. The seller put in a sell order for the 5,000 Bitcoin at a price of $6,200. Well, the current market price was at the time $8,200. What? Now, some are citing a possible scenario with the seller having intended to sell for $8,200, but just inputting the wrong amount. And I guess that could have made more sense, but just for a second, stop to think about it. Like, really? You're about to sell $40 million worth of Bitcoin, and you are in such a hurry that you don't even stop to double check your order before hitting the sell button. That sounds pretty damn fishy, to me at least. And of course, that has led many people to shout that this was simply manipulation. Because this relatively small event happened just on Bitstamp, and it had huge ripple effects across the market as a panic sell occurred, with limits and shorts being triggered. While some rejoiced and bought the dip, the story is a bit more complex due to our old buddy bitmex. Now, how exactly does bitmex factor into this story? Well, bitmex uses a price index for its futures contracts, which is made up of the average price between Bitstamp and Coinbase. In other words, the price index used by bitmex gives 50% weight to the price of each exchange. Therefore, if the price drops dramatically on either Bitstamp or Coinbase, then the price index can also be dramatically affected. And if you are a whale and you understand this, then you can really game the system in some quite nefarious ways. Because if the whale coordinated his sell order with a short position over on bitmex, then that would be absurd, because he could have crashed the markets, made bank on shorting that crash, then bought back in with massive gains that he made by shorting the market, since he would have just made millions of dollars in the matter of moments. It will likely prove very difficult to establish those links directly, and I'm not saying that is for certain what happened, but it does speak a lot about the market that we are in, that something like this is theoretically so gosh darn easy to pull off. It would seem that bitmex should reconsider its position on creating the price index from just two exchanges in order to make manipulations harder in the future, perhaps including, like, I don't know, 10 exchanges would be a bit wiser and make it harder to do such manipulations in the future. Of course, not impossible, just harder. Where there's a will, there's a way, guys. This, of course, serves as a reminder that Bitcoin is still in an absolute infant market, which is open to all sorts of manipulation, and the whole market is movable with actually relatively small order amounts. We are still so damn susceptible to whale manipulation, which, to be honest, is a bit of a shame. Yet, we will likely never escape market manipulation completely. Just look at our old mates, JP Morgan, Citigroup, Barclays, MUFG, and RBS. They have just this week been fined a combined $1.2 billion for manipulating Forex markets. Now, that sounds like a really big fine, but the daily turnover in the Forex markets is in the trillions, and these banks would have made a lot more than the fines that they were forced to pay. Anyway, we all know banks are corrupt, but the point is that the Forex market is huge and it is still manipulated like crazy. The Bitcoin markets will likely always be manipulated in one way or another, but as the markets grow, the effects of that manipulation will not be so dramatic. The reality is that if you are a big enough whale and understand how to game the system, then that's probably what you're gonna do, unfortunately. Now, whether you are a Bitcoin whale or a fiat whale like JP Morgan, a whale is a whale, guys. And when they splash, you get wet sometimes. The good part is that even though we are in a market rife with such manipulation, that such events actually do not produce long-term trend reversals. Bitcoin is maintaining a strong upward trend at the moment. Just look at how quickly we recovered from that flash crash to move right back up to $8,000. Okay, on to the next part of today's news. 732,000 Bitcoin addresses own at least one Bitcoin. Sure, okay, look. Now some of those are super whales and some of those are OGs that haven't touched their Bitcoin in years. But what this says to me though, is that there are a lot of people with their tickets on the rocket ship. That goal for anyone watching out there, try and get your hands on one Bitcoin and hold that baby until you get to the moon, guys. Another interesting statistic is that 60% of all Bitcoins have not moved in 1 year. That's 10.5 million Bitcoin being held as a store of value for the last 12 months. Now keep in mind that millions of those are lost forever and that Satoshi may never come back to claim his 1 million Bitcoin. But it does show people are using Bitcoin to be their own bank. And they are choosing to hold Bitcoin as a non-interest bearing savings account, which is pretty awesome. The interesting thing too is that the data shows that the top addresses have only been adding to their Bitcoin stacks recently, with no Bitcoin flowing out, just Bitcoin flowing in, showing that top whales are indeed riding the waves of the markets and are in this for the long-term play. Remember, there are only 21 million maximum Bitcoin, 4 million are already lost, and simply owning one Bitcoin could be life-changing in 10 years. And it increasingly seems that the reality of owning one Bitcoin being a life-changing event is starting to catch on because Google searches for Bitcoin have climbed to a 13-month high, possibly pushed up, of course, by the price spike, but also by other things like 60 Minutes. They did a show today which aired and has been teased for a week. 60 Minutes gets on average 11.4 million people watching the program. I have a feeling that the Coinbase app is going to get a lot of downloads today. Not to say that this will kick off retail FOMO, but it could certainly play a role in exposing or even re-exposing the retail crowd to Bitcoin. However, outside of the mainstream coverage that 60 Minutes will bring, if you want a real story about Bitcoin, you should probably check out Max Kaiser's To the Moon series. You'll be much better informed after having watched that. But if you do have those friends calling you up after watching Anderson Cooper fumble his way through trying to understand Bitcoin, but are left with loads of questions, then send them over to thecryptolark.org to check out my free educational course on cryptocurrency and Bitcoin. So when you do get those calls, just say, go check out that dude. He'll let you know what's up. Anyway, guys, thank you so much for watching today's video. As always, you guys are super, super awesome, and I appreciate the time you take out of your day to come over here and check these videos out. If you did enjoy today's video, leave a thumbs up on it. You can always subscribe to the channel if you are new around here. Long live the blockchain, and peace out till next time.